Hey, how's it going, everybody? It's your boy Seb Formica here. I just wanted to check in with you and give you my thoughts on kind of what's going on in the real estate market. I'm getting a lot of questions about, some Nostradamus stuff. Like, Seb, what do you think is going to happen with the real estate market? Obviously, I'm not an economist. I'm not a financial advisor. I'm a real estate broker here on the ground in San Antonio, and we've been doing business here for the last 7 years. There's definitely some change going on in the market. I have a visual tool that I like to share and show you guys today while I'm talking to you. But the reality is, while the Fed made their announcement yesterday about, or the day prior about, dropping the interest rate, that really doesn't affect mortgage rates. So, it does affect the ambiance or the mood of investors. And a lot of folk, you saw the Dow Jones dropped a lot that day as well. So, it does give an atmosphere of consumer confidence and where that's at as far as the federal funds rate. But mortgage rates go off of the Treasury bond. And right now, that Treasury bond is really high. We normally hover between 1.7 and 2.4% over the Treasury bond, which if you looked at it yesterday, it was around 4.5%. Overall mortgage rates for a 30-year conventional loan was at 7.11, and VA, FHA were at around 6.5. So we're going to continue to see those numbers, I think, for the future. So a lot of folks have been sitting on the sidelines waiting to make a decision of how, to do that move up or how to downsize and whether they should do it and whether they shouldn't. They're sitting on 3.5% mortgages or even less in many cases and a lot of equity. So they have concerns about whether they can sell their house or not. And if they do, where are we going to live? We can't afford it. There's a lot going on in that decision, or a lot that goes into that decision. And to be honest with you, it takes a year sometimes to make it happen. So while this isn't a pitch to, create consultations and appointments, you guys that are watching this typically follow me and see my emails every week. Just know you could reach out and have a conversation, because I think the more you put this off, what's going to end up happening is you're going to keep putting it off. And the reality is, the people that are going to win in the future market when things do normalize are going to be the folks that figure out how to make it happen now, and remember that they're not just buying a house, they're also buying the mortgage, and that mortgage can be refinanced down. So you can, key point number one here is, if you can afford to make the purchase, now's the time to shop. I mean, honestly, like, you have houses on the market with long days on market. So this is assuming you purchase a pre-owned home. So long days on market, sellers are motivated. They need to sell and get to where they're going for the next phase of their lives. Inventory is high. You can pay less potentially for a home now than you could have when you were shopping during COVID and rates were historically low. They'd never been that low. They're probably not going to get that low again in a lifetime. So my question to you is, if you're sitting on the sideline, what number are you looking for? Because we could probably get to that number pretty quickly. I've been dealing with this for, since the market started to shift in 2022, and most people have refinanced down, and they're already in the fives if they bought in the sevens, right? There's different programs that come up if it's a VA loan where you could refinance down, and there's open periods, so to speak, of when, or open season for some programs where the interest rate can drop down. For specifically the VA, that IRRRL program, it opens up and they go, hey, we can get you down to 5.5. Well, if that's what we're waiting for. And I think we're going to see more of the 6 to 7% for the next foreseeable future, with the Fed only committing to making two rate cuts next year. It's going to kind of prolong this, right? The rates that were happening, or the interest rates that we're projecting, are going to go off of that Treasury bond and not necessarily be affected by the Federal Reserve's drop to the regular interest rate. But you have people that are just waiting for a magic number, and in many cases, we're finding those magic numbers for folks by just being patient and using the resources we have. And I'll talk about that here in a second. So, first things first, if you're buying a pre-owned, just like I said, you can always refinance down because you're buying the house and the mortgage. When you buy new construction, you're also buying a house and the mortgage. But in many cases, there's ways to find deals where you can get a really good interest rate. So why would you wait when you can pay less, um, and potentially still get the mortgage rate that you're looking for? And you got to focus on affordability, of course. That's kind of the disclaimer here. Always focus on affordability. But, I'll just give you a case study for new construction since I already talked about pre-owned. For new construction, we just closed a deal last month where house came back on the market. We negotiated a haircut on the sales price. The buyer got washer, dryer, refrigerator, blinds throughout the whole house. It was a 3,200 square foot home. No, it wasn't 1,200 square feet. For those folks that are listening to this that are cynical, I could be cynical right back and say it was a 3,200 square foot home that they had equity on when they closed because we were able to get a deal. The builder was motivated to sell. They needed a solid buyer. Their previous sale fell through. And that particular deal came with a 3.99% interest rate buy down that was permanent. So these folks that sold their house 2 years prior with me, they came back to San Antonio unexpectedly right after 2 years and thought they needed to hold on to their house. But we figured out a way to make it work. Yes, was it surgical? Did it take time? Did you have to trust your agent and get professional services and be open to the advice that it can happen? Yes. So it's a two-way street. If you're gonna buy in this environment, you have to work with someone that you can trust because you will find the deal or you will find something that works and then refinance down. Either way, that refinance option is going to be there. But the point in case study number two is they bought a home for less, the property value is higher, and when they go to sell in 5, 6, 7 years, when all this passes by, those folks are already going to probably refinance down even lower, or may not be able to refinance any lower than a 3.99. And they're going to be building equity and they're going to be paying their mortgage down, and it all still works. So the possibilities are there. You gotta be open to the concept of shopping in a market where people are going to listen to all the negative news, right? Um, what do? If you hear the sky's falling, most people will watch the news in the evenings, and that's their world. So just I would encourage you to just do some research, reach out. Don't just look at the standard forums of mainstream media. And I'm not shooting it down. It's a good source of information, but there's other ways to look at the tactical problem when it comes to buying or selling a home. So just reach out. So my question here, I'll share a quick visual before I wrap this video up. So this is the appreciation chart for San Antonio, New Braunfels Metro. If you're in other markets and you're watching this video, just ask me. I could pull the data for your market and we can have the same kind of conversation, and I could get you hooked up with an agent that is working that area and knows what's going on. So this goes back to 1992 here, as you can see, and it goes out to 2024. There's only three down markets, okay? And don't forget, we just came out on the list here in San Antonio as one of the top hot areas where people are moving to. People are coming to Texas, all right? So there's going to be demand for houses. That's why builders are building everywhere. But if you look, appreciation means the value of your home. Okay. So on average, the values of San Antonio, New Braunfels market homes appreciates at 5% annually. That's a good investment. All right. There's three down markets, and 1996 was the first one. It was negative 1.4. 2008, it was negative 7.5% in values that people saw. But look at that. 2024. through the first three quarters. This isn't the end of year data. When that does happen, I'll share it. It'll probably be compiled by the middle of February, and I'll get that out to you guys and do another video. But this one here in particular, 4.9%, on the negative side. But what I will point out is while we can't see what's in 2025, we can predict based on data that it's probably going to be a flat market again, not a lot of appreciation. So this is a good time to buy, right? Like I just did a presentation last night online and I flashed on this chart. When is it a good time to buy? And the reality is, if you do it now while you have less buyers shopping, you're more likely to find a deal and refinance the actual value of your home as opposed to everybody shopping at the same time because the interest rates drop and then you're overpaying for a home like we were doing during COVID, and all the way up until the middle of 2022, really. So, for sellers watching this, um, I do have some advice. Just knowing this is very zip code dependent as well. Some zip codes are thriving, some neighborhoods are thriving. So you got to look at the microeconomics of the whole thing. This doesn't mean that your specific house went down, 5% in value, but it's a good indicator that the market's flatlined. So for sellers, what I would tell you is um, look at the data, make the pricing decision, and instead of going above, you need to consider going right at the price that is going to probably move in 30 to 60 days because it's going to be attractive to a buyer, or you got to subtract 10,000 from that. 5,000 from that, whatever the case may be. But I'm not trying to put you in a position where you're losing equity, but you may not sell and it may cost you even more than just reducing that price by 5,000 so you look like a deal and then you get multiple offers potentially, or you sell on time. You're not carrying the cost of a home for 9, 12 months because we're trying to hope that someone will find our house to be just as, important as we think it is, because there's so many options out there. That's probably not going to happen. Most buyers are looking for a deal and they're serious buyers if they're in this market. So it's still a good time to sell always. We have a cash offer program as well. We could lead into it if you're researching and like, hey, do I deal with this market? We have a few different cash offer programs that we can run. See, so you could see what that looks like. You're always going to make more money if you sell the traditional way, but we used to advertise three P's to selling, right? Pricing, plan, and presentation. And we would dissect that. And you could go watch that video. I have it posted. It's my listing presentation. It's always available online. You can go and check that out on my YouTube page. But at the same time, we were looking at it the other day, and I think the next P that's added to that is you got to have patience as well, because not everything sells in 32 seconds. Not everything sells in 15 days or 30 days, especially if the price isn't if it's not priced right. So um this year has been very, very interesting. I've been watching videos and memes of everybody talking about how 2024 felt. Um, it's been brutal. So like you'll go into it and then the same house should have sold in August, goes into multiple offers, 140 days on the market, right before Christmas. And that's really what we're seeing is when there's an appetite and the right buyers in the market, your home will sell if it's priced right, but you got to be patient. And that's kind of the point to that. There's no magic solution to this. We got to ride it out, but there is hope for the future. But if you're waiting for 2% or 3% to make a move, you probably need to give me a call and talk to me about it, because we gotta have a conversation. That was really a once in a lifetime kind of thing. 3% is doable, high threes. Like I said, we just found it, but you gotta look for the deal and be open to getting some professional advice and doing things in a certain way. So That's it. That's all I got. I just didn't want to let this week slide by without putting something out there to talk about this because the reality is it's going to be more of the same. And if you've been putting off making the decision already for 2 years, by the time this year's done and another year, you are going to be in the same home that you're probably not happy with, or it's too big, or it's too little. And there's a chance you could defer that for 5 years, 10 years, and you gotta have professional consulting to help you kind of decide whether it's the right thing for you to do. We have connections to help you with home renovations and that kind of stuff. So everything's on the table. Just reach out to have a talk. But if you're holding off waiting for threes and fours to make a purchase, um, it's probably going to be a while. But if you're open to new construction and you look the right way, you can probably find a deal here and there. So just reach out. Again, all my contact information is below. I'll also send this out on my next newsletter. So that way, everybody that gets my email is uh, is actually getting this directly to their inbox and can listen to the talk. All right. Talk to you later. Merry Christmas. Happy New Year, happy holidays, and we'll talk to you soon. Bye bye.